Hello, everyone. Welcome to this program, to a special program on risk and compliance. I have some very excellent panel discussions with me, panelists with me for a panel discussion. And I'll introduce them to you, and then we will go into the panel discussion. My name is Manor Agrawal. I'm the group editor at Banking Frontiers magazine. And it's a magazine that has been around for 20 years, covering various developments in the financial sector from so many different perspectives: business, technology, risk, compliance, HR, marketing, etc. Apart from the magazine, we do lots of seminars and conferences. And I've done moderated innumerable number of programs over the last 20 years. Let me now introduce you to my panelists in this panel discussion. I have Mr. Amit Ratrikar. He's from Karad Urban Co-operative Bank. Mr. Satish Nair. He is with Vastu Housing Finance Corporation. Mr. Alok Nagpurkar at Sage One Investments. Ma'am Shalini V from Solytics Partners, as well as Prithvi, again from Solytics Partners. So welcome everyone to this interesting panel discussion on a very interesting topic. Thank you for being part of this discussion, being held at IIT, now from everywhere in the world or everywhere in the country at least. Okay. So to briefly introduce the topic, some of you are from the finance and technology background, would understand a lot of what we're going to get into. Some of you from outside the space and looking at this space in wanting to know more about you. So here in this conference, out of that curiosity that you have, it is definitely a very interesting field, this bank financial technology field, where so many fintechs are coming in, so much transformation is happening, so much government attention is there, so much attention from individual customers is there. It's really a very happening place. And countries and cities and corporations all around the world are looking to attract fintechs to come and set up base in their region and create value there. Our focus today is on the regulatory and compliance side of it, and to some extent the risk side of it, because these are becoming increasingly critical. It is very easy in today's world to start a financial service, but to maintain it is a huge challenge, as many startups are even finding out today. That is the criticality of one regulation from RBI or from SEBI, and so many business plans could go haywire, or so many business plans could actually automatically get some fertilizer and water to grow very quickly, both ways. Today we will be discussing the evolution of regulatory expectations in India pertaining to anti-money laundering and KYC compliance and to risk management. This is even more pertinent in light of technology revolution that is happening. In the past couple of decades, we've seen path-breaking advancements in technology and an overall shift towards data-driven decisions, judgments pertaining to the customer, pertaining to the business, pertaining to regulatory and compliance. So fortunately, more and more data is becoming available, which has become the raw material for the financial sector today. For many financial organizations, more than money, it is data that is the raw material to run a lot of operations. In the areas of risk and compliance, the financial sector has been a pioneer in using two technologies, machine learning and artificial intelligence, to bring about major changes in the business processes, in the business products, in the way they integrate with customers. Financial regulations like Bank Security Act and anti-money laundering have been there since time immemorial, but they've drastically evolved and given a new shape in the 21st century. While globalization and various international events impact the industry, What has come to the aid of the industry is data. So something may be happening in some remote place, which has an effect. But what you can do depends a lot on how you use data, because data is the real tool to make things happen. So data is the real business ally of financial organizations today, especially for the risk and compliance departments and groups. With this background, I think it is time I give a little more detailed introduction into our panelists. Alok Nagapurkar, if you can raise your hand, or if you can nod your head. Thank you, Alok. Welcome. Alok is the Chief Operating Officer at Sage One Investments. In his career spanning 2 decades, Alok has been instrumental in driving strategic and operational transformation initiatives for compliance, technology, and analytics. He is a strong proponent of leveraging AI and ML and other advanced technologies, which he believes are instrumental in streamlining compliance processes. Welcome, Alok. We look forward to the wisdom and the insights that you've gained over these 2 decades with our esteemed audience today. Next, I would like to introduce Satish. Satish, if you could. Yes, thank you, Satish. Satish is the head of Treasury and Corporate Affairs at Vastu Housing Finance. In his current role, he works very closely. His work is very closely interlinked with regulators and policymakers in India, allowing him a very unique perspective on the current and future trajectory of risk and compliance regulation in the country. Satish, we look forward to hearing from you all the insights that you've gained when talking to a variety of people, regulators, and others. Moving on, I'm happy to introduce to you Amit Rathekar. Amit, welcome, Amit. Amit is the head of KYC and AML cell at Karad Urban Cooperative Bank. It is one of the oldest Indian cooperative banks, more than 100 years old. Amit has experience working across global banks, Indian banks, and financial services. And in his current role, he is spearheading the KYC and AML initiatives transformations at Karad Cooperative Bank. Welcome, Amit. My next panelist is Shalini. She is the head of compliance and fraud at Solytics Partners. She has worked across the value chain of financial crime and compliance, delivering critical regulatory projects for clients across the globe, as well as leading the development of the next generation AM solutions. Welcome, Shalini. I did ask you to introduce yourself because by gender, I think it becomes obvious who is Shalini in this group. But anyway, that's Shalini, the one who's smiling. And lastly, let me introduce to you Prithvi. Hi, Prithvi. Prithvi is the principal at Solytics Partners. He has a unique blend of technology and domain expertise in quantitative risk management, which he utilizes to spearhead solutions development at Solytics, while also managing delivery for clients. Thank you, friends. Thank you very much for being with us in this panel discussion. So now I move on to the Q&A part of this. And let me start with the ladies first. Shalini, I would like to start off by asking you to give us some kind of context for us. Can you elaborate on the regulatory landscape in India in terms of which are the key regulatory bodies? What are the segments that they're regulating? What are the minimum KYC and anti-money requirements and compliance requirements that they all are together and collectively putting for the industry to comply with? So that kind of picture about who and what and the regulatory aspects.
Sure, Manoj. To just say, right, the regulatory landscape in India is predominantly driven by 3 regulatory bodies, which is your Reserve Bank of India, your SEBI, your Security and Exchange Board of India, and your IRDI, Insurance Regulatory Development Authority. Your RBI predominantly governs financial institutions from commercial banks to cooperative banks to even the payment system providers. Your SEBI governs firms like asset management companies, your stockbroker exchange dealers, and your IRDI, obviously your insurance sector. So the Prevention of Money Laundering Act, which is your PML Act, which is published by our Indian government, right, is established keeping in mind the complete regulatory or the complete life cycle of your customer journey and is in very well sync with your global regulatory guidelines. As per that, every entity or an organization should have a defined customer identification and acceptance policy, which includes robust due diligence measures and a sanction screening, then a well defined risk framework, a policy and a risk framework, and as well as ongoing monitoring protocols as a part of their basic AML KYC measures. So, to put in the crux, these are your three pillars of your basic AML KYC measures, which are imposed by these regulatory bodies.
Great, Shalini.
Yeah.
Can you expand a little bit on when the government or the legislation makes some rules and regulations? Does the impact primarily flow through the regulators or through other government bodies? How does that collaboration happen so that there is no confusion?
Sure. So the regulations come primarily to these to the regulatory bodies. So it's the RBI in case of financial institutions publish circulars or updates your circular based on what are the exact nitty-gritty details of these KYC policies measures that they have to follow to. So your rules are primarily, or these kind of regulations are primarily established by the regulatory bodies, which is your RBI or SAB or your IRDI. But the basis of all of them are widely aligned with your PML Act, which is imposed by the government.
So would it be right in summarizing that the leading steps are taken by the regulators and then the government tries to bring some kind of overall framework so that everything is aligned?
Absolutely, absolutely, right.
Thank you
And
so
now
much.
all of these guidelines, right, is all then, so we do have a FATF, like a financial action, which is a global regulatory body, which is going to evaluate India, right? So this is all in, in alignment with the global regulations as well.
Right, the global regulations is definitely a key factor. Uh, okay, thank you, Shalini. Let me come to you, Satish. Satish, since you interact with the regulators and policymakers frequently, can you outline the trajectory in terms of regulatory evolution in India over the past few years? And then how do you see it evolving further, past, present, and future?
Sure, Manoj. I guess it's a very interesting question, and let me answer this in three parts. World over the regulators, and I guess India is no different in that. The primary responsibility of any regulatory environment is to provide a free and fair financial services environment where transactions are happening without any aberration and are clean in nature. The complexity comes in when you find innovations happening, and or kind of challenges happening, and that is what is happening in any regulatory environment, whether it be challenges happening in, say, in US, whether Fed or SEC has stepped in, or in, say, in Europe, where ESMA or ECB has stepped in, and in India no different, like SEBI and RBI stepped in. Our Eureka movement actually started after having a large default way back in 2017. I guess that is when you saw started NBFC sector going into a crisis and all sort of things coming up. So I would say that regulations have always kept up pace whenever there was been a challenge. And more interestingly, in the last couple of years, again, we have to think, also look at from the prism of how COVID has impacted the entire, landscape. Is that it is it is actually coming from the same evolution of more of self-regulation, and I would say this has always been a flavor where self-regulation was always intended by any regulatory setup. It is only when players have deviated and try to do innovative that regulators have to come on and bring everyone back. It's like the class monitor or the class teacher bringing the naughty children back together in the line. who try to break the line and go start and and be in front of the line. So I guess regulators have probably been in that in the last few years, especially in India, and it is no different. And let me tell you how that environment has changed. So for more established segments, RBI or SEBI has only promulgated environment for more of self-regulation. They have only intervened whenever there has been instances and specific instances, and that also limited to that. In fact, if you look at the RBI regime of regulating the NBFI segment as a whole, it has now come the latest guideline on the scale-based regulation. It clearly actually outlines what is the intent of the regulator, that they have created this upper layer, middle layer, and the base layer, and how the regulations are actually tiered down. And now you see that these circulars or any of the subsequent regulations intending to those layers specifically. So in the last 1 year or so, once the this scale-based regulations have come in place, you have seen more of articulation of intent in the top layer and then in the middle layer. There's hardly been anything in the base layer. So the intent of the regulator, especially in the financial services, is very clear, that they are moving towards or actually promulgating self-regulation. They are removing the regulatory arbitrages which was there. So that is again a clear intent shown by the regulator, that the regulatory arbitrage has to move in, and rightly so, because the segment is not I would say equal across the there is a huge spectrum. The bigger players extremely at the top end and extremely fringe players at the top, smaller end, and of course then things move across on that. So I guess the intent has been very clear, and the systems and the the regulatory environment is also changing on that. Some of the recent things, again, for example, appointment of a chief compliance officer in a middle layer, NBFI, and for top layer, things like prescription of a CET1 and a CRR for them. So these are things which has come up very clear, where the intent of the regulator has been very clear on this front. My genesis or my interpretation, whenever I speak to any policymaker or regulator, they are very clear that we will intervene to make the environment free and fair. So what you have seen in the fintech world as well, again, it stems from the challenges what the sector has seen. So what happened in Hyderabad, for that matter, and some of the players actually going through, and some of the other unregistered elements also, vitiating the environment. So you will see that the regulator is very clear that they want to keep the environment, fair and transparent. I guess regulators' intent, and not just in India but world over, has been that on self-based disclosure as well. The more disclosures become transparent and open, I guess this will be a better and free, I would say, steps to actually get to that level in terms of giving out information. So again, if you again look at how the regulatory environment, especially for regulating such kind of entities, whether it be in US or in Europe, if you see that there is a lot of transparent disclosures happen in a public forum. So I guess that is where we are also moving into. Like, look at the recent regulations on LODR amendment for even listed debt companies as well. Now, a listed debt company's disclosures are almost similar to a listed company. So there is that intent which is moving across, and I guess it is all for good, because it gives a very free and fair market for all the participants involved.
Fantastic. Thanks, Satish, for that overview. One question was coming to mind while you were talking of size-based approach to regulation. Today, we have this flowering of unicorns. So within a very short period of time, they move from small to medium, perhaps to large. Do you see the regulations keeping that also into consideration, so that they don't, are they quick enough to respond to changes like that?
See, let me tell you, regulators are only, they come into action when public money gets involved into something. All what you're talking is all about valuation games. They are not bothered, I'm sure, unless and until some, public impact happens. Of course, they will be concerned that if these players are impacting public at large, and especially they have come very heavily on fintech companies. But what you're talking about, the big players, whether it be an edtech or, FMCG, or those kind of, or e-com player, at this stage it is not impacting the financial services or financial market, I guess it will only promulgate if there is a public issue at place. And of course, I'm sure we as a country as well believe in a free and fair market. It is pertinent that regulator don't poke nose in everywhere. Let the market decide. It's a free market at the end of the day, Manoj. We have seen rise and fall market, public sab janta hai. That is the moot mantra. So I guess we have to leave it to that judgment and let the regulators do what they are best known to do.
Fantastic.
That is interim at the right time.
Of course, I was pointing more towards fintech kind of organizations and not the pharma or textile, pharma or any other industry.
You see, Manoj, that there have been so many, follow-up, circulars and, regulations which has been coming up in the fintech space. And, kind of whether it be related to KYC or whether it be related to, capital requirement, all those things are now coming up. In fact, what I understand also that the, within the regulatory space as well, in the supervision team, there are specialized teams being developed, which is looking into these segments, on an exclusive basis. So there is a lot of emphasis, a lot of, in fact, whenever we, have a conversation with the regulators, they are very keen to understand and look at how this system, place is also evolving. But as I said, they are doing a class teacher's job in terms of, looking at it and seeing it with that, if any child is being, extremely mischievous and naughty, how they can make it online.
That's a beautiful analogy, actually. A child needs to be taught discipline, but also needs to be given the opportunity to develop their skills, to be creative, to have an inner learning desire, and not just be a robot. So I think giving that analogy is really helpful in nurturing and controlling.
That's right.
Okay, great. Thank you so much. Let me now come to Alok. Alok, to take on what I was just talking to Satish about this evolution of unicorns and the rapidly development in terms of financial services and technologies. I'm sure that's something of deep interest to you as an investment management firm. But what is your experience in terms of early adopter of technology in terms of risk and compliance areas? Business development is understood.
Yes.
How do you see that evolution happening, and the big firms and the fast moving firms getting the benefits of some technology or something like that, data or technology?
Yes. So actually, that's a very important question, I'll say, because technologies usually are adopted by the front end first, and the operations, compliance, and the back office are usually slow or number two in kind of adopting them. But we have certainly moved to a stage where in the fin services industry, the back office is also being hit by the technology wind, so I'll say. So just to begin my answer on this, in my career, which is so when way back, I remember when I first began my career in the advisory part of the fin services industry. At that time, it was literally filling up paper-based forms. I mean, and even the reporting was to the regulators, etc., was by post. I mean, you had to send those forms per month or whatever that regulatory year was. We have certainly moved on from that, and we have certainly moved up in the technology chain. So to give you a perspective, so today we actually manage offer PMS and AI both as an investment management firm. So PMS is basically portfolio management services, and AIF is like alternative investment fund services. And technology has influenced the compliance, risk, and operations so much that it won't be wrong if I say that I look at my company as a technology company having a PMS and AIF license. I mean, technology has actually moved into operations to that extent. So just to expand a bit more on that, I would like to say that today's operations are no longer an in-house kind of system or a team where you have an in-house operations team which sits in your office and does the operations part. Today's operations is an ecosystem where all your partners, including people like custodians, bankers, the RTAs, and us and the PMS providers, have to work in tandem and together. And the customer has to have a universal kind of experience. So this has been a massive change which I have actually seen, and hence the operations teams in-house have been growing smaller, and the partnerships actually have been increasing. You add to that the requirement for real-time and continuous monitoring, both from the regulator side as well as the demands from the customer side, which is where technology, ML and AI are playing a very important role. One interesting thing or an example which I would just like to state here is, now the regulations also change like more frequently, and actually it is quite a job for the compliance team to just look at the circulars or the updates and then implement them in the processes. So machine learning tools are actually doing a great job. They can actually scour various sites and they can throw you the updates which you're looking at, which increases the efficiency drastically. Thirdly, and just to again summarize my point or add on to my point, operations and end-to-end, like client operations have been influenced by technology, and no longer are working in silos actually helpful. So nowadays, even if we have separate teams in operations, overall for the client, it is just one single operations team. So right from let's say a client onboarding part to answering like client queries or sending him reports, it is just one phase. And those teams have to interact with each other, work with each other, and provide a unique, unified experience to the client. Second angle to this is regulations are no longer just only a domain of the compliance team. They have to be applied across all the processes. Let's say like for example, recently a regulation which was introduced in AIF that the investee company percentage should not go about 10%. So that had to be applied in the investment team also, as well as the onboarding etc. teams also. So my point is, it is all becoming end to end, and increasingly technology and ML is actually influencing it.
Thank you, Alok, for that very comprehensive overview of how operations is changing and from being inside the walls to outside the walls. And as you explained, technology is playing a key role in making that integration happen. I'm just also curious to know if you look at the technology agility of all the partners that you work with, the technology agility and the compliance agility of those partners. Does it happen that the financial organization suffers because the partner did not do some compliance thing? Is that a risk?
Yes, certainly I will say that is indeed a risk, but the way technology is moving and the way, where we are moving to is, it's like we actually want to use one platform for all the partners. That's where things are going to right now. So it's no longer that compliance etc. of the PMS provider is different, and then the custodian is different, etc. It has to be a single platform, and we are definitely moving towards that. But the risk is there, yes. If one of the partners fails to do a check, or if something snaps in the compliance system of one of the partners, the client actually like has that risk, or we all have that regulatory risk.
So is there a way to use analytics or machine learning to kind of minimize that risk, to catch it a little early, or to give a warning, or to stop a transaction if there's a risk?
Yes, so actually, as I said, the answer to this, or one answer to this, in which we are also actually currently trying to move now, is to have or develop a single platform on which all our partners like actually work. So actually, whatever I see, even like my partner sees, and to certain platforms, let's say like for example Zoho, etc., do like have this capability, and I think this risk will fully get addressed only if everybody finds a way to like come on the same platform. Otherwise, currently it will actually will end up that different partners are giving different alerts like to the clients.
Okay. Sounds good, interesting. That's another new kind of development in the ecosystem that is creating
Yes.
opportunities and enabling new innovation. Let me come to Amit now. Amit, you represent a sector and that is very old. You represent an organization, a bank that is more than 100 years old. This ecosystem has definitely gone through many phases and seen transformation. The beauty of this sector is that it is rooted in the common man in the urban and rural areas. And that is one sector that the country has been trying to reach out to since independence. And they've tried nationalization and incentives and regional rural banks and so many things. But the grassroots is still a challenge. Do you see technology making a difference in terms of providing them financial services, yet keeping up with all the compliance requirements like KYC, anti-money laundering? And that's also more of a cash-based economy, especially in the rural areas, tier 3, tier 4 towns. How do you see that matching up happening using technology between Bharat and in India, kind of? And what role is your kind of bank playing?
Yes, sir. So we are in a quite a unique space because we are governed by a state regulator, our cooperative institutions, as well as Reserve Bank of India, as being licensed as a bank to operate as a bank. And from the KYC ML's perspective, being a reporting entity for FIO IND. So in this unique scenario, we are also quite unique in the way that most of our customers also happen to be our shareholders because of the RBI share linking norms. So perhaps we are one of the only distinct entities who are not just serving our customers in the capacity as customers, but we are serving our customers in the capacity of members. And as our management believes so, in the last 100 years, this is our 105th year of operation. So we believe that the 100 years that have elapsed, it's as good as we are a 5-year-old startup.
Oh.
So that is what we have been trying to inculcate as well as pass on to all our deep level staff, because the customers have also changed. So like, for example, we have certain customers who have been there with us before independence, and it's their third and fourth generation who are our customers today. So, but what has actually happened is just like laws, regulations, and compliances have changed, we have adopted technology in a way that suits us. So right since adopting handheld pygmy devices, which we go to our customers for door-to-door collection, to having Braille-enabled ATMs for all our centers, we have actually come a long way. Now, in terms of AI and ML, perhaps we are also a part of NPCI IDRBT framework. So we are also almost in line with every other bank because of the regulations that we face. And one of the unique things that we kind of face is that we are one of the only taluka level based banks. So we are the ones, as you call it, tier 4 and below, because we are, most of our branches being rural branches. So you will still find that from KYC perspective, let's say people might not have PAN card. You still have Form 6061. But Aadhaar based enablement has actually changed the scenario. So we are actual witness to how things changed, as well as one of the also adopting technology in the last 15 years or so. We have seen the benefits, and as rightly pointed out by the panel, for us also data is the new gold. And with data analytics that we are currently doing, we are coming up with fantastic results, and we are coming up with some meaningful solutions to address certain customer areas, as well as, let's say, something called as financial discipline, which is a little bit of a concern at some grassroots levels, because your NPA rules or your financial discipline in terms of having regular payments, delinquencies. So we are not just using technology to ensure compliance, but we are also playing a twin role of being a bank, helping them in their financial needs, as well as educating them in financial matters. And with all this, using technology has been a game changer, but it's a gradual process, and it's a process that we have invested a lot over a couple of years. And just like our human resources, sometimes we also tend to ensure that over a period of time, the investment in technology will be higher than the human resources.
That's interesting that the investment in technology is growing at such a rapid rate. Okay. Let me come to Prithvi now. Prithvi, can you describe for us how technology is actually making technology and machine learning and AI is making compliance more manageable? Also, as an add-on question, how is AI and machine learning itself evolving? Is it evolving very rapidly, so that does the evolution of AI and ML impact the compliance solution also?
Yes. So let me just give you a brief about how this overall technology plus data plus AI ML value chain is, right? And this is from my experience consulting different banks across Europe and US, and in, of course, in last 3-4 years we have been consulting and deploying solutions, especially on the AML side for a lot of Indian banks, especially housing finance and banking financial sectors. We are working with a few of the cooperative banks as well, right? So if you look at AML compliance, right, I mean, from broader category perspective, right, you have regulations, policies, which has been pointed out by different panel members. Then you have data, which is very, very important, whether it is a customer data or whether you have to enrich the data from compliance perspective, right? That is very, very critical. Then to basically facilitate them and to get the actual output from these two elements, right, you have technology and AI to just enhance and act as a catalyst, right? So if you look at the AML value chain, right, you have a KYC process at the start, right, where a lot of AI and ML can be used. You have your name screening process, which is a very, very critical element for any AML activity. That is very, very important. Then you have a transaction screening, then you have transaction monitoring, and so on and so forth. I'll just describe how technology and AI changes each of these value chains when it comes to KYC. Just for the KYC part, right? Like nowadays, like with coming of like your Aadhaar card and Aadhaar enabled authentications, right? Things has been more streamlined, and that is one of the biggest technology innovations when it comes to actually authenticating a person from the KYC perspective. But in a lot of spaces, right, where I mean you don't have these kind of entities, right, you also look at the other documents like your driving license, It could be your election or election voter ID card. It could be your utility bills. So these elements are used and used as a data points for the further advancement. And how it is done in industry is these are set of documents which effectively propagate to your NLP related problem. So let's say if you want to identify a person through a voter ID card, right? You can use document enhancement or NLP process to get those details. If you want to study the pattern of a particular person, like how is the spending of a particular person is happening, right? You can use the utility bills as a part of NLP process, which can be effectively taken during the KYC process, right? One of the things which we have seen, especially for the utility banks, which has been doing very well, and it is one of the good case studies, is what they did during the initial stages was, I mean, they invested a lot on technology so that they can extract lot of data which was not previously available. It could be your utility bills. It could be your other bills which are not being usually synthesized previously, right? And these all sources of data was then enhanced using NLP and NLG, and then taken into consideration for first authenticating that person from AML perspective, and second building the scorecards, risk scorecards, your credit scorecards, which will help us in giving loans and so on and so forth. So that's a step number one where you start the KYC, right? Then comes your name screening, and name screening, as it has been actually guided by RBI, right? So basically, if a person is a part of any sanction list, if a person has any negative adverse media which is coming or not, if a person is a part of PEP list, right? So we have seen in this particular set of problem, right? There are two challenges in India, right? There is actually lack of synergizing the data, right? So like people would not have very granular level of these sanction list. I mean, a lot of vendors which we know of are very global in nature, so they don't understand the Indian intricacies, right? There are a lot of Indian bodies which are giving you the circular and the list of the people which actually needs to be screened during the name screening process. So that can be enhanced through technology, where you can run a data enrichment engines using technology, and then build a database of all those people, which will help in the name screening process. Okay, that's point number one. For the retail banks, where you see a lot of screening process is done, the other challenges of false positive. So let's say if you have like 20,000, 30,000 customer to be screened on a daily basis, like you are giving them loans or they are doing an onboarding process, right? And then there is a system which actually screens them. Let's assume there is a current system which is actually screening them. So one of the challenges which we have seen for Indian banks is, let's say you have so it's basically a screening system which will throw you an alert. The alert could be actual true positive or actually false positive, right? So the issue is, lot of time banks are facing challenges that the false positive numbers are so high that they are not able to cater to, and their AML team is not able to cater to the to all the false positive. And this is one of the challenges which we were speaking with one of the clients, right? So previously they had certain system which was giving a false positive rate of 10 to 20%. So let's say if they are, and it was a housing finance company, so one of the challenges which they had was at the pace where they were originating, right? I mean, the false positive rate were so high that their AML team was not able to take care of that. So how do you reduce the false positive rate is also a unique problem, where you can use NLP, you can use AI algorithm to reduce the false positive rate. So that's a second challenge in transaction or basically your name screening. Then comes your basically your transaction monitoring. So basically now you see, I mean, we have different transaction patterns in India. You would have different transaction pattern. we have transaction which is, since the economy is globalized, right, a lot of remittance and a lot of money is sent outside India, right? So one of the key challenges on the transaction monitoring is basically how do you define the correct scenario, because you have different demographics, you have different regions, you have different spending behavior. So one of the key AI problem, or I would say AI plus technology problem, is to adapt correct scenarios. Okay, that's number one, where I mean AI is helping a lot. Second is basically, I mean, how you are implementing those scenarios on a bigger chunk of data, right? So because these days a lot of transactions are happening, so you can't like screen every transaction. So that's very key point when it comes to getting a right scenarios. Then in transaction monitoring as well, I mean, there is a challenge of false positive rate. Lots of alerts which are currently being coming are very false positive, and how you can use technology, AI, to automate that. And that's where the feedback loop or the constant AI learning comes into picture. So what happens in technology and AI is basically it will study the transaction pattern, throw some alert, and based on the feedback of the AML analyst, it will again feedback, and again this AI cycle will go. And that's how the AI is evolving, right? So whatever model you have trained previously, I mean, it would get enhanced and it would get layered up. It will predict more accurate with time, and so on and so forth. So that's where I think technology is used, AI is used, and then basically automating your reporting infrastructure so that all the reports which are SR report, STR reports, whatever is coming from different banks is reported to RBI and regulatory bodies in a very automated fashion. So these are the gamut of areas where I think AI is and ML is key role is being played from AI and ML side, as well as technology like big data. I think building a distributed systems because you are churning heavy data, you are working on heavy data. So those kind of things are currently being used.
Thank you, Prithvi. That's a pretty comprehensive overview of the way technology is evolving and the problems that are being faced and the problems that are being resolved. I remember one of the articles that we did in Banking Frontiers, one of the articles, one of the bankers was saying that because of the sudden large-scale onboarding of customers onto the digital platforms,
Yes,
the algorithms were going haywire. They had not, the false positives kinds of thing that they had and false negatives that they had, that the system had built up based on transactions over 4, 5, 6 years, was not able to cope up with that sudden change of millions of new customers coming and millions of new kinds of transactions happening. And then they had to relearn, make the system relearn and adapt. So that's a good part of the system, is that relearning is built into it. You don't have to do another separate study, identify the problems, find it's kind of automated. So that's interesting. But I'd like to hear from our panelists here, Amit, Alok, and Satish. What has been your experience with using AI and machine learning? How adaptable has it been to the evolving scenario? If you could give a very brief response, each of you. I think we're kind of coming close to the end of the discussion. So now we need to speed up and hit the target in time. Amit, maybe, and then Alok and Satish.
Sure.
Yeah. So actually, as Prithvi rightly pointed out, as a part of the process, empirical data which was already existing in the system might not match with the current transaction patterns. So as FIU has shared us the list of red flag indicators, there are 174 such red flag indicators that are shared by FIU IND that need to be incorporated in your system for monitoring. So you will find out that each of this is divided into separate categories like transaction monitoring, typology, risk management, employee initiated, different categories, adverse media, employee initiated, public complaints. So if you look at this entire gamut of scenarios that are built up, over a period of time, you'll realize that the system-based alerts that are being thrown through the use of AI and ML, the number actually fluctuates, not just depending on the transaction pattern. It depends a lot on how the customer behavior also is. So like, for example, a recent trend I'll tell you with regards to my specific region. This is tier 3 and tier 4 cities. So April and May, the spending was quite high because of marriage ceremonies and season. Whereas in June, just because your schools reopen, people tend to spend a little more because they have to pay the fees and everything. So our number of alerts also automatically reduce. So this is in tune with the economy as such. And this is quite visible at our module level as well as transaction level. And then if you drill down to even account specific level.
Interesting. Thank you, Amit. Alok,
Yeah.
your brief overview.
Yes. I'll actually answer this on two specific applications of especially AI, ML, and or automation, which I have been trying to implement. The first is so as a SEBI-registered intermediary. So our main regulator is SEBI, and one of our key requirements, or one of the most important requirements for our compliance team, is to stay abreast of the various circulars or the various regulations which are updated on SEBI. So here, what I have been trying to do is trying to build an algorithm or ML based solution which maybe at least scouts, let's say, basic site like say SEBI, etc., and try to give us the updates. But the problems here which we are facing, I will still say that the data actually which we have, and the quality of sites or the quality of sources which we have, we actually will have to work more on that before we move into the actual analysis of the information. Because a small change in the format of, let's say, for example, any source site, and the whole algorithm goes for a toss. Even if a single table change is done by the site, etc. So even if we have partnered with the site and it is a permission based tracking which we are doing, still a small change will actually cause the whole algorithm to go haywire. So I still say that working on the sources is a key part. Second, I would just like to build on what Amit has rightly said, and also which Manoj touched upon. So when we do, for example, a PEP testing, so we have certain standard rules or standard tools. But an interesting thing about PEP is it is said that the risk the assessment or checking for PEP should be on the risk assessment style and not on the time limit. So by that I mean there is no fixed time in which a PEP has that risk. So he may have that risk in his lifetime, even when he has maybe left that post or he has moved on from that political post. And this is one key thing which we are finding. We are facing a problem when using today's tools, because after a certain time, that person tends to go off the radar because that a certain time has passed. Second point, as I said, of course, dealing with false positives is a universal problem. Even we have to actually deal with them. And then there are things like dated information or sources not complete, incomplete, etc. Yeah, so those are my 2 points.
So sorry. Thank you, Alok. I just want to post a small question to Shalini or Prithvi from Solytics. You guys must be facing this problem of reading data and digesting data from multiple sources. The problem that Alok has just described. You
Yes.
have figured out a way to make it manageable. Very short reply, one of you.
Yeah. So We actually churn a lot of data, right? So we actually churn data across globe. We churn news data across globe to understand the adverse media and the trends, right? So I think yes, the problem is genuine, right? And the problem which I think Alok have pointed out actually exists, wherein like the sources would change, and I mean there is a pattern, or the way the data is actually written, those would change. But then there are highway way around as well. I think I mean the way current technology is being implemented, right? I mean if you can have technology which is divided into two parts, your rule-based system and your NLP or NLG technology, where how you are extracting the data, amalgamated with a proper review process, right? Which is basically human wisdom based. I think the problem can be minimized to a lot extent. Okay, and that is what we are doing currently as a part of our product, right? So we actually synthesize sanctions PEP data from Indian sources, or let's say news data from both regional and non-regional sources, right? And we also face these challenges during the data enrichment process. But what we have understood is, I mean, if you can't have 100% foolproof solution, but then you can always strive to be better than what you are currently are. And that's how we have set up a 3-layered process, which is basically your automated process, tapped by rule based process, and then there is a review process which goes and which makes sure that whatever if we are missing any data or not, if there are data integrity issues or not. And then the third is basically, I mean, if all the data is mostly updated. So those are the processes which we have set within our team and our organization, just to make sure that we are at least best in market. I won't say, I mean, we are just 100% foolproof solution.
Thank you for that explanation, Prithvi. Before I come to Satish, I just want to tell the audience that Alok used the term PEP for anyone who is not familiar with. That stands for politically exposed person. It's a government or a global regulation kind of thing, global compliance thing, that to handle transactions and engagements with such people with little extra caution. Satish, would you like to give a 1-minute overview of how machine learning and AI is being used and what challenges are being faced? And are the solutions you finding in technology or somewhere else?
No, sure, Manoj. I guess a very pertinent question, but so let me just caveat by saying that we have heavily invested into AI ML, not just in the compliance function, but across the operations. And I'll tell you in a bit. We have a 45-member exclusive tech and data science team, which crunches various amount of data from various sources, not just from credit bureaus or from alternate sources, but also look at as regulatory environment also changes. And I'll explain you why. Because again, being an NBFC, HFC, we are regulated not just by RBI, but also our parent, the earlier regulator NHB as well. And then being a debt listed company, we also have SEBI regulations which comes in. And then on top of that complexity is the Companies Act, which also governs the, I would say the overall statutory structure of the organization as well. So in a very multifaceted and complicated regulatory environment, it is pertinent that every circular or a regulation has intertwining implications on many things. For example, if there is a circular which comes on LCR by RBI, it also means that there is an implication on my operations as well, or for that matter collections, because where we have to look at how I am looking at cash collections, if at all it is there, or if it is some delinquencies, how my entire LCR computation also gets impacted. So what we have done is that whenever such kind of circulars or regulations comes in, we first, the tech and data science team, again we have put a kind of an algo where we identify that which are the functions which will get impacted by this. So when a scale-based regulation happened, what would be the typical impact on that, and then draw in terms of how do we do a change. What we've done is that we have a proprietary award-winning platform which we have built in right from day one of our existence, which is called Pulse. And in that, right from sourcing a customer through the entire life journey, and the support functions like a credit decisioning or underwriting, or for that matter finance, or for that matter customer service, treasury, compliances, everything resides on the same platform. So for us, that is like the I would say a mothership which controls the or I would say regulates the different SBUs within ourselves, and which becomes very intuitive and easy, because whenever there is a change, it simply flows into that system, and then everything kind of becomes kosher. So that's something which we put across. And in fact, it has gone to that level that today, if you decide to open a new branch, there is a lot of science which goes behind it. Like in the history of Vastu, we have not closed even a single branch. Why? Because the kind of data science and I would say the analytics we use in terms of first to aid decide that whether in this region or in this pin code, how the current metrics or current asset class is actually performing. For that matter, for example, we will look at the delinquency trends by analyzing the credit bureau data. We will look at alternate data where for example, how the SROs have been performing there, what has been the registration, what kind of products are getting mortgaged. So these kind of whole lot of data. We also look at data like, for example, the HR trends in that, like how many people are moving from there, from one NBFC to other NBFCs. We have created peer groups where again we analyze this data. A lot of science actually goes in, and then we look at, okay, fine, from a regulatory environment, if I have to open a branch there, what are my regulatory challenges if I have to get that done? For example, whether it be a Shop and Establishment Act registration, or for that matter, if I have to go into a small labor or whatever that may be, all those things again the system kind of decides in and gives that feedback. So we are
comprehensive approach you have.
very
I
comprehensive
just
approach.
wanted to focus on that one small thing about false positives. Is that something that keeps propping up? What is your kind of approach to keep it under control? Very quickly.
Yeah. So Manoj, I guess it is very pertinent that the entire system initially was thought of building like an early warning signal. So it was actually built that way. But then where we realized that no, this is actually helping on to become a mainstream surveillance mechanism. So especially when we are doing an underwriting and we're looking at the decisioning of cases, and when there is a deviation in the credit policy, wherever that happens, we see that these kind of false positives happen. For example, it might be a region which is showing a high delinquency number, but there could be a certain property or certain thing which would be very different. So there are a lot of false positive happens, but what we do is that we have created a parallel reviewing mechanism, which is a concurrent review mechanism, which looks at this and then weeds out those false positives. So there is a mechanism which actually runs through. In spite of running this
entire thing, human intelligence to kind of in a nutshell.
At the end of the day, it works that way, because see, no matter we talk about a PEP exposure, or for that matter kind of I would say we deal in properties, in sense we finance housing. So again, there would be challenges on the ground. For example, each SRO or the sub-registrar office is very different, where the the local patta would be very different in an MP in say in a place called in the Mahakaushal belt versus same patta if you would have looked at say in Karad, where Amitji is actually the whole idea of these pattas or the lal doras or whatever it is. It's a very different nuanced kind of a thing. It is a very different thing. What we do is that we work with communities on the ground, because that is how a lot of human intelligence actually flows into the system, and that is something which gets into the system, and we kind of help to bring on that. And at the end of the day, as you rightly mentioned, these false positive requires a bit of human intelligence at the end of the day to ease them out.
Thank you, Satish. Amit, before I ask you to respond, you raised your hand. I have to check with the Deepak from Solytics. How are we doing on time? Should we continue the Q&A? Should we move on to audience questions? Deepak, if you could give us some kind of clue.
Sure, Manoj. So I think we have, completed the stipulated time, but we can continue for the next few minutes. And there are a couple of interesting questions that the audience has submitted. I'll, ask you guys to address those once the conversation ends. But we can take the next 10 more minutes.
10 minutes. Okay. Thank you. Thank you, Timur. Amit, can you please respond, and then we will go into the audience Q&A.
Yes. So recently, in one of the interactions, FIO and the director has stated it on record that you can use AI or ML to reduce your tasks to ensure timeliness or, let's say, better data quality. But at the end of the day, when your SAR, the STR that is being submitted, is going to be ultimately read by a small person who might not be even aware of what a PAP is. So you have to ensure that everything that is being submitted in the grounds of suspicion in the STR has to be in basic English language, easy to comprehend.
Thank you, Amit. For anyone in the audience who's not familiar, STR stands for Suspicious Transaction Report. Am I right, Amit? Right. Thank you. Deepak, let's have the audience questions and then let the panelists respond to that.
Sure. So I think one very interesting question that has come up is regarding the evolution of digital KYC, right? So the person asked that, with the way these processes are getting digitized, right? So you have digital KYC, video KYC. How do you ensure that the screening of customers happens in a real time and with minimal wait, while also ensuring total compliance in a very thorough process?
Can we have one person take this up and give an overall industry view? Amit or Satish, maybe?
Yeah, sure. Should I take that? Yeah, thanks.
Please.
Thanks for the question. So let me put it this way that the onus lies on the convenience part of it, and the convenience is clearly that the customers, and given that we have seen a very severe pandemic still raging, in my opinion, so digital KYC and such kind of measures are going to stay. Now it depends upon how the whole environment or the regulatory environment is kind of being supportive. We've done a great start in terms of getting things like video KYC. Again, we have challenges still on the usage of Aadhaar number and all, which of course the Honorable Supreme Court had its views, and we're mindful of that. But I guess steps like video KYC. In fact, we have now piloting an interesting project where we are in fact going away from doing physical signing of agreements to digital signing of agreements. So we are with customers. We are now actually entering into where they can just use based on Aadhaar verification or OTP verification, where they can actually sign agreements with us. They don't have to visit the branch, and they can actually do it from a convenience of the home. So again, this is something which is kind of going across. This is going to stay. And banks are heavily investing into, not just bank, but I would say the entire BFSI segment is investing very heavily into this space. In fact, what I understand is that with the evolution of things like cryptocurrency, our regulators are also up on their feet and trying to address that. So sooner or later, you might also see a digital variant of our rupee as well. You never know.
Yeah.
So that's something which we're all keenly watching this space. But at the end of the day, all these comes at a cost, and I'm not cost in sense from a commercial cost, but from a risk cost, and I guess that is a very important thing, whether it be from a data integrity point of view or from a remote data management point of view. But those kind of things is very critical, and regulators have been very I would say on the forefront of managing this. And I guess it was a very commendable I would say coming from that old school to new school, that now things are actually, in fact, I don't know whether I can share this, but I don't want to name which regulator is this, but I actually met them last during the end of the first phase of pandemic, and one of the feedback which came was from the person was that today life is become so easy, because earlier we used to get a lot of files, and today things are getting approved on email. So I guess it is a big statement. I guess it's just going to improve.
Thank you, Satish. I want to share one very, very small story regarding video KYC. I was trying to renew my car insurance, for which I had to take photos and videos of the car and then upload it online. But as my bad luck was, the photography was happening, but the uploading was happening. There was a timer limit, and I tried twice and failed. I had to go back to calling the agent and him doing the task. So what comes to mind is if there is some kind of bandwidth optimization or data squeezing mechanism within these kind of video applications, particularly, that perhaps can help solve some of the field problems. I live in Bombay. If someone in tier 3, tier 4 city where connectivity is poor, this problem would be more acute. So the point is that the technology has to be sensitized to the ecosystem that is available. RBI is pushing for digital transactions now on feature phones, those kind of things. So that's the, I think we should have 2-3 generations of technologies that are compatible for a solution to work. Even the AI and ML should be able to work on 10-year-old system or something, and not say because it's 2G I can't connect to it or things like that. Okay, let's go ahead. Deepak, what is the next question from our audience?
So Manoj, I think you touched upon the insurance part, right? So next question is actually related to that. There's been this advent of online digital insurance providers. A lot of them act as intermediaries only. So the question is that are they also regulated, or should they also be regulated in the near future? Although they are not underwriting, right, the insurance, they're just acting as an intermediary. But should the regulations also touch upon these peripheral players in the market?
Who would like to take this up? It's not addressed to anyone in particular.
Yes.
Okay, let me give my answer and then we'll move on. The point is that the objective of regulation is to make sure that the customer is protected. So if there is someone in between the customer and the service provider, then essentially someday or the other the regulator is going to come and say that you need to be regulated. And for a very broad perspective, keeping the customer in mind, keeping the customer's financial safety and caring in mind, that is going to be the long-term approach. Deepak, what is the next question?
Next one is similar in the sense that it touches upon crypto, right, in India, which is in a very religious, regulatory perspective wise, and a very ambiguous place right now. We also had this, I think, very recent case with Vault, right, where they suddenly suspended all transactions, all withdrawals, and a lot of people sort of, lost the money. And again, it comes to the point of protecting the common man. Right, so crypto globally is becoming more and more accepted, but in India there's a shadow ban on it, right? So is there any way that it can become mainstream in terms of payment processing in India in the near future?
I think,
this is your area.
yeah, I can take it. Alok, if you want,
Alok and then Prithvi.
You can take it, Prithvi. Yeah.
Yeah. So see, I have, and everybody have their own view, but what I feel, looking and interacting with different regulator, we have been working closely with few banks who are interacting on EBA. We are working with US, like banks who are working with US Fed, and then in India, right? One common consensus, especially regarding crypto, is eventually every country would have their own digital currency. That would be regulated, that would be done in such a fashion that ultimately a digital ecosystem, as you have for currency, will be developed. Things are at a different level across different geographies, right? I think China is leading the table. I think RBI have also started that process. They have certain deadlines around that. For non-regulated crypto, I think, and there are people, investors, and experts, right? It's actually developed on blockchain technology, right? So I think from technology perspective, it's fine. But when it comes to regulating the people, the person who have developed crypto, how it has been developed, who is creating those digital wallets, right? I think that needs to be regulated. when a customer is onboarded in platform, right? His detail needs to be regulated as a part of KYC. So those regulations, even if they are developed, right, it will be very difficult to track, because somebody in South America sitting in one one room or garage can develop crypto technology and then probably make it famous, because people would then speculate on that particular part. So that is very difficult to regulate, and the point and the view of the central banks are, they actually don't take that ownership. That's what you have seen in last budget from in India and RBI perspective as well. But ultimately, there would be a journey which would conduct from a physical to digital currency, and all the steps are being taken by different central banks across globe for that particular path, and that's what I see in foreseeable future.
So if I may add on to what Prithvi was saying, right? From a global regulation perspective, also this is recognized as, or the crypto problem is recognized by various regulators as indeed a lucrative industry, right? And there have been measures, or there have been at least thoughts and measures to evaluate different possibility of a regulation, while especially I think with blockchain, especially during the onboarding or while establishing the wallet, there has been a lot of discussions and multiple forums which are still probably at a very starting stage, but definitely discussions are on and the attention is on to come up with a possible guideline. So we should watch that space for more.
Definitely. Alok, you wanted to add anything?
No, actually, I wanted to add something on what Satish answered previously. Just wanted to add a small data point which might help the person. Another question. So, as he said, so for me, so for my company, in the PMS, we have to open 3 separate accounts, like for a client who, when we actually onboard him. So digital onboarding has actually reduced this time from, let's say, a week or so to in a couple of hours. So that is the effect which it actually has had. So just want to add that on what Satish had rightly said.
Fantastic. Yes.
Yeah.
Many areas the achievements have been not linear but exponential. So instead of 10% improvement, you're getting 10x improvement.
Yes.
which really deserves a lot of appreciation. Deepak, how are you doing on time? Do we have time for more, or do we call the session to a close?
Yes. I think we've already overshot the time by quite a few minutes, so we can bring this to a logical conclusion. And the remaining questions I'll collate and share with the panel, and we can get back to the people who've asked those with the proper response later.
So a very big thank you to all my participants in this panel discussion. We have touched upon so many interesting areas. All these areas have future impact, and for the audience watching this, for those who are in the industry, for those who want to be in the industry, for those who want to track the industry, I'm sure you would have found all of this useful. Let me promise you, this is a very important and a fast evolving industry, and the financial sector is worth tracking and understanding for your own benefit in whatever field you are. Thank you all very much. Thank you, IIT. Thank you, Solytics. Thank you, all my panelists from banks and investment companies and housing finance. Have a great day.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you very much. Thanks.
Thank you.